Welcome back to Money Talks. If you're just tuning in, we've been talking about wealth and the type of tax treatment that different accounts may be subject to. I'm now joined by one of my colleagues, wealth manager Ron Wasco. Ron, let's talk about this for a little bit further.
Yeah, thanks for having me.
How are you?
Doing well.
All right, good. Yeah, it's good to have you here. So the type of tax treatment, to me, is something that you want to go over almost at the very beginning. Of course, you want to get to know people. You want to understand their bigger picture, trade information. But before I even talk about investments, I think it's so important to say, geez, it's not so much how much we can make. It's going to be how much can we keep in your household.
Absolutely.
Right?
Yeah.
And I think, gosh, if you can keep more of your money in your own household, you know, I truly believe, I think you're a pretty big advocate of this too. Government spending is probably way, way worse than what any household could do. So
for sure.
I'd rather have more in the household. So let's just talk a little bit about the Tax Cuts and Jobs Act of 2018. We have corporate tax rates going down to 21%. It's already proving to be very beneficial, obviously. Still 7 tax brackets for individuals, lower tax rates for 6 of those brackets to 2026 at least. Limits on state and local taxes that can be deducted, including the property taxes. And then standard deductions are going up, however, the exemption allowances have gone away. How do you make sense of all this for an individual or a couple?
Well, it's really a task at hand. You have to sit down and you have to look at their entire situation. Taxes and investments are going to be separate, but they all play a role in forming the overall picture of what you're going to see. When you're doing a tax analysis, it's important to know, take a look back and see what they made last year, what they paid in taxes last year, and what type of deductions they took, and where they were able to shift some of their investment monies, whether they went in qualified accounts, which gives them that tax advantages that you talked about earlier, or whether they were just saving in like a non-qualified account, which is fully taxable in any given year.
Right. And I know I've talked about just the idea between saving and investing, and there's a difference. I mean, saving might just be putting the money away. It might be putting it into savings or checking accounts, and that's a good thing. That can be a great thing, and for short-term needs perhaps. Investing, though, it's not just about trying to make money and putting yourself on that risk ladder at some point, whether it's conservative all the way to aggressive investing. To me, I think it's really important to know how much access do I have to my money if I'm putting it away, and then when I use it someday, what are the tax implications?
What are the implications?
So how would you look at someone, and when we first talk about those qualified plans at work, how would you tell someone to get a better understanding of that? What can they do?
Well, they can reach out to somebody like us for sure. They also should have somebody in the HR department that's well versed in what type of plans that are available to them and where that might benefit them specifically. Always have an employee handbook handy. We ask sometimes that our clients come in, they bring a copy of that with them.
Right.
So we can review what their options are and how to take advantage of those.
Lots of rules, right? I mean, every employer might have different rules. I mentioned access to 401k plans. It might only be through loan provisions, and even then, there might be limited access. One of the things that I seem to be doing a lot of is I have a copy of the 2017 Form 1040 right in my office now, and I feel like I'm pulling that out a lot to show people, just basically, not to say I'm a tax expert, but basically, like you said, walk through your income. Where are the adjustments? Go to the next page and let's see what your taxable income is going to be. We actually had a great case of late that we worked on together.
For sure,
Tell people about that.
Yeah, we ran into a couple clients a few weeks ago that we were looking at some investment planning going forward with them, and it turns out that their income level was right on a tax bracket, actually just over. And had they been able to shift more funds to their employee-sponsored plan on the qualified side, or even invested into an IRA, could have saved them substantial money from having to pay it to the government. They could essentially pay themselves instead.
Right. I just think it's such a victory. We love helping people anyway, but it's such a victory if we can look at a tax form and we can work in a strategy. Now, you can't always just put thousands and thousands into retirement plans. We all have to pay our bills too. But it is great to find when we can actually find an advantage for people. We're going to be right back, folks, and we're going to talk a little bit more about this. If you'd like help determining if you are using the correct strategies, pop into our office. Let us help you. You can reach us at 633-1515. We'll be right back here on Money Talks after a short break. We're going to talk about how you should consider strategies considering the new tax environment.